What's up everyone, it's Scotty with Money Investing. So in this video, I wanted to talk about SOFI, and SOFI here popping a little bit over 19, almost 20% on the day with some very strong momentum coming in after the earnings for the second quarter of fiscal year 23. So in this video, I'm going to break down exactly what the numbers were like. We're going to actually calculate our intrinsic value, the new revised fair value on SOFI after the earnings have come out. And I want to thank you guys, well, more specifically our community, for having me buy shares of SoFi because of all the answers you guys have been basically giving me on all the pop quizzes and the pop questions. And we had a deal for every one question you guys answer, I buy one share of SoFi. And now I do have a very small starter position, I would call it, that I'm up on a little bit over 28%. So thanks to you guys. I really appreciate it. And of course, it has worked out so far. And we're going to do some analysis on this company, kind of share the research and the new revised intrinsic value. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. I do want to point out that there is a 16% annual discount that does expire tonight after midnight on the Patreon and Discord. And more importantly, we've got the options course, the brand new options course, which does, again, the coupon code launch expires tonight after midnight. And the bundle, which includes all three courses, so fundamental, technical, and options. There's over 100 lectures, video lectures on these three courses. You will literally get a full education on fundamental analysis, technical analysis, and of course options trading as well. So all that's going to be included. 50% off, and this also does expire after midnight tonight. So today is literally the last day if you want to take advantage of that. So link's going to be down below if you want to join us. So when it comes to SoFi's members, 6.2 million, up 44% on a year-over-year basis. So very strong numbers coming in for the second quarter. This right here is Galileo account. So we did see an uptick once again. Last quarter, we did see a downtick to 126 million. So this was up a little bit over 11% on a year-over-year basis to 129 million. This right here, quarterly performance. So net revenues coming in at 489 million, up 37% on a year-over-year basis. And of course, adjusted EBITDA also coming in at $77 million. But the two main reasons as to why SoFi pretty much rallied the way it did was, number one, they raised their guidance for the next quarter, and they also beat on EPS with a narrower loss compared to what the expectations were. Two important ingredients for the stock popping, right? That's pretty much the truth across the board for any company's earnings. If they beat on EPS, and not only that, they raise their guidance for the future. Raising their guidance is a sure shot way of any company stock to rally. So if any company basically raises their guidance for the next quarter, that's, like I said, a sure shot way of the stock price popping pretty aggressively. In the case of SoFi, pushing up almost 20%. So quarterly adjusted EBITDA, $77 million. We're actually going to be using EBITDA in our calculation to figure out what that fair value is for that company. And this right here is going to be the guidance here. So results exceeded expectations and the guidance also being raised. So we got second quarter 2023 guidance 470 to 480 million in adjusted net revenue, and adjusted EBITDA is going to be 50 to 60 million dollars. It's going to be a margin of about 11 to 13%. And this right here is going to be the second half of 2023 non-GAAP guidance. So we expect to deliver 1.025 to 1.085 billion dollars in adjusted net revenue, with about 180 to 190 million dollars in adjusted EBITDA as well, with a growth rate of about 19 to 26%, and EBITDA margins of about 18% for the company in the second half of this year. So very strong numbers, and this is going to be their revised guidance for the entire year, fiscal year 2023, with revenues coming in at just under $2 billion to a little over $2 billion. Earlier, it was at 1.955 to a little bit over $2 billion. So that's been raised to 1.97 to as much as 2.03 billion, 28 to 32% growth, and adjusted EBITDA margins at 17%, between 333 and 343. That's a pretty big surprise, upside surprise, compared to the last guidance, which was closer to 260 and 280 million. So again, that's, they're moving in the right direction. I think a lot of it can be attributed to the student loan resumption that they're pricing in their models for starting in at the end of August, starting in September. So that obviously is going to play a big role in SoFi's revenue, refinancing activity, and all those things. Speaking of, we did see a pretty substantial uptick, which I'm particularly excited about, is the home loan origination business. So as we know, the lending segment obviously includes, we got personal loans, student loans, and home loans. And back when rates were really low, home loans was very, very high. Well, relatively speaking, right? So it was $735 million, $800 million. We've got $800 million, $657 million, and student loan refinancing or student loan originations were also pretty high, over $1 billion, $859 million, $967 million, $1.4 billion. So majority of the lending, right, if you combine these two, was done between home loans and student loans. Personal loans tend to be a little bit more on the risky side, and they were, on the lower end of that spectrum, right? So 1.6 billion compared to 3.4 is about half, a little bit less than half, but the other half was, most of it was being done by home loans and student loans. Now that quickly changed when rates went higher, and home prices obviously have stayed where they are. They're really, really difficult to get into right now. And you'll notice that this business, as of last quarter, fourth quarter 2022, pretty much it was all personal loans. It was all personal loans, 2.4 billion off of that 2.9 billion. And take a look at home loan origination, right? $105 million, and student loans $405 million. That's really, really low compared to where we were in, let's say, 2021 or even 2020. 2023, fast forward to the first quarter, again, $2.9 billion was that number compared to 3.5. If you do the math here, so 2.95 divided by 3.566, that's about 82%. 82% of it has been through personal loans. Now that number shifted a little bit this quarter, so 3.74, and then if you divide that by 4.37, 85% is what we're looking at. But we did see a pretty substantial uptick in home loan originations from 89 million to 243 million. Now this is, in my opinion at least, some of the safest type of lending activity, because if the borrower defaults, you can go seize the home. With student loans, you can garnish their wages, but that again is a little bit more complicated. With personal loans, it only affects their credit and their history, but you can't really recoup a lot of what you've lent out. So this is, again, if you take a look at it on a risk profile basis, personal loans riskiest, student loans, and then the home loans probably the safest type of loans that bankers and lenders can pretty much lend money. So this is a big uptick, which I'm excited about, and I think Wall Street is also really excited about that. And then if you take a look at their net interest margin, that has also been increasing over the last, I would say, last 8 quarters on an interest earning asset basis, but liabilities have also gone up. So their NIM, which is net interest margin, is or basically did see a little bit of an uptick. It's still sub 6, something that, eventually if it does get back over 6%, I think that's going to be huge for the company. So if you take a look at total interest earning assets, we've got to over $20.3 billion. I believe this is in thousands. And then we've got total interest bearing liabilities at $16.8 billion. So that gap is a little bit under $4 billion is what they have. So more assets versus interest bearing liabilities. And of course, the interest rate, the average rate, so total interest earning assets, it's now, look at this, it's gone from 5.4 to over 9.26. And that's probably because of the personal loan dynamic. Again, if you go back 6 quarters, personal loans were not a significant portion of their overall lending activity, right? It was only 50%, a little bit under 50%. Now it's over 80%. And personal loans, as we know, are much higher rates compared to home loans. Now, this may seem pretty good. I want to be very clear. 9.26% seems phenomenal for SOFI, but that's a lot of it is coming from personal loans, right? So that's something to keep in mind. And of course, we've got interest-bearing deposits, which comes under liabilities, 3.86%, and other debt that they're paying interest on is 5%. So total interest-bearing liabilities, again, you do that, average them out, is going to be 4.26%. So assets minus liabilities, their net interest margins, 5.74% at the moment. So rates have obviously gone higher. So both asset rates and liability rates have gone higher. So that's why their net interest margin hasn't really changed a whole lot. If you compare this to second quarter 22, 5.23%. So maybe it's gone up 50 basis points. But for the most part, a lot of the changes have happened in the asset side, where we have seen the dynamic, the overall contribution shift from a lending perspective. Now, moving forward, I think we are at the top of this sort of personal lending cycle, and I think this will start to kind of normalize a little bit, and I think we could start to see student loan refinancing, home loan refinancing kind of pick up a little bit, as rates also are not going to be going higher anymore. Maybe just one potential rate hike left from the Federal Reserve, but then eventually we are looking at cuts next year, which is going to spur a lot of refinancing activity, which is going to shift that dynamic once again in the favor of SOFI, and the risk profile is going to get a little bit better. Now, When it comes to balance sheet, again, they've got a little bit over $3 billion of cash. Total debt sitting at $6.8 billion. Other is all deposit liabilities, so we don't have to worry about that. But they've got pretty good balance sheet in terms of investment securities and cash. And of course, debt levels are pretty controllable from a company perspective as well. Now, if you do some analysis here, we already know that they have guided for a EBITDA. So this is not net income, but we're pricing in EBITDA in this analysis of $340 million. And share count's about 926 million. What I'm going to do is I'm going to price in about a 20% growth for SoFi, which is very reasonable. 20% growth in EBITDA for the next 5 years for the company. I'm going to give it an EBITDA multiple of 20 times, and then of course do a 12% discount rate, 10% margin of safety, and share dilution is really what's going to come down to it, right? So if they actually keep diluting shareholders, that's not good news. So right now at 0%, you'll notice that the fair value is about $9.33, a little bit over $9 is going to be that intrinsic value, which is a big step up from like low fives and mid sixes. Like it's definitely a big step up from those levels, considering that the EBITDA guidance has been raised substantially. I mean, it's gone from like 280 to like 340. What type of a growth rate are we looking at? 340 divided by 280. That's a 22% increase in the overall adjusted EBITDA number, right, when it comes to the guidance. I think it might even be 260. So if you do 340 divided by 260, we're looking at a 30%, almost a 31% increase, surprise to the upside on adjusted EBITDA. Now, if you do, let's say, 2 to 5% share dilution, then obviously we're working with $8, $9, a little bit under $9. It depends very much on share dilution as well. But just to be safe, I'm going to keep it at 2% share dilution, and the fair value obviously ends up at 845. Considering the different growth rates and different P multiples, that's going to be the different fair values for you. Right now, it's trading at a little bit over $11. So we are closer to, I would say we are very close to this level right here. I think this is where we get to as close as possible. So 30 times P multiple, or a 18% growth rate, or even if you do like over here, that's going to be 24 times adjusted EBITDA multiple and a 24% growth rate. So that's, I think, that what the market's pricing in from a best case scenario perspective, considering that SoFi right now is at 1145. So, talking a little bit about technicals, this will go ahead and turn this level into a support for the company now, and resistance is going to be 1375. So this right here is going to be that next level to watch for SoFi. And like I said, support level is going to stay put at 996, sub $10, and closer to 864, 865, like right here, is going to be, in my opinion at least now, starting to become a little bit more attractive at those levels. But I do still want to point out that, again, profitability, GAAP profitability, net income, and actual free cash flows are still an uncertainty for the business. So that is something that we have to pay attention to eventually. When the corners are turned, then of course there's going to be massive potential for SoFi. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. If you're interested in joining, don't forget we do have the bundle currently 50% off, available till tonight. After midnight, this will go away. And of course, the options course also available with a 50% discount, coupon code LAUNCH, if you want to take advantage of that as well. So always happy investing. I'll see you all in the next video.